Scott Bauer is joining us, CEO of Prosper Trading Academy. He's been looking at target shares, listening to the report here. What do you think, Scott?
Yeah, so I absolutely agree with Kevin. I mean, when you get in a situation that fundamentals and technicals are pretty much thrown out the window, it is very difficult to analyze, what do you want to do? What kind of trade, what kind of investment do you want to make? So when I look at Target here, I look overall, okay? And I look at this stock, and the recent lows were right around 127, 128. I didn't buy it there. Obviously, in hindsight, I wish I did. If I get the opportunity again, I want to be long it there, Oliver. So I've created a trade based on that. And this is solely based on me wanting to own stock right at that 128 level. So normally we discuss trades that have, they're completely risk defined. This one is not, because again, it's with the idea that I want to own stock at 128. So here's what I'm doing. June 30th expiration, 2 weeks. I'm buying a 133 put. I'm selling 3 of the 130 puts, and I'm buying 128 put. So it's not even, right? I'm long 2 puts, but I'm short 3. The break even on this is actually 128. I'm going to collect $1 credit to do this. So here's why I love this. If Target just sits right here, or by June 30th expiration, it is above 133, I keep my $1 that I collected. If Target goes down anywhere from 133 to 128, not only am I going to keep my credit, I'm going to collect a little more money. 128 or below, that's where I would start to incur losses. That is the equivalent of me buying stock at 128. So the idea behind this is I am willing to own stock at 128. Otherwise, I would never put out, or put on a type of position that has undefined risk. But this is what I call my wish list trade. I wish I could buy Target at 128. This allows me to buy it there. It also allows me to collect even more money than I'm collecting from putting this trade on.
So the idea is you put the trade on, you monitor, even though it looks like on the P&L chart there's unlimited losses, you're going to step in and you're going to own the shares.
Yep.
In the worst case scenario.
Right. And again, the reason I'm doing this is because, let's say I didn't have an option position, I'm going to put in a buy of Target at 128. So this allows me to collect some money up front, make even more credit in the interim, and if the stock does dump back down there, I'm going to get my 128 stock.
Okay. All right. Interesting approach. So a Target believer, ultimately, if it drops to an extent, you're looking to own it and take a piece off your wish list. I mean, 160, basically on the last earnings. So it fell apart so fast. From 160 down to 125, now at 136. If any of this goes better than planned, you would think that the shares would kind of revert back closer to their trading range and the general trading range of their sector as a whole, because there's such an outlier right now. So
exactly, I totally agree with that. But like what you and Kevin were talking about, the social aspect, that plays into this.
To put your finger on it.
That is the unknown, right? That is the wild card here. And I'm taking that risk that something may happen again from that aspect, as opposed to the fundamental or analytical side of things. I'm taking that risk and saying, okay, if something happens again, I'm willing to own that stock down at 128.
Got it. All right. The customized put butterfly ready to own the shares. And I will say, when the same drama kind of played out for Bud Light, the shares did get hammered for about a month, but it seems like they've kind of stabilized and maybe it's past it. So interesting one to watch here, Target. Thanks, Scott Bauer, CEO of Prosper Trading Academy. You got it.